All right, good evening, everyone. Welcome to the Monday the 29th, 2020, our Hurley Investments Market View Commentary. I'm going to go over tonight decision making. I can't even spell it. Can't even say it. I need to also underline it. Make it a little bit smaller. Decision making. And here's the short answer. When I make my decisions, I should just type in there, right? When I make my decisions, I'm not always right, but I need to get that out of there. But I have to be able to justify why I made my decision. So it's pretty easy. Your best educated decision has to have something behind it. What do you think the number one answer is when I usually ask people, well, why did you do that? I'll get this answer 99 out of 100 times. What do you think that answer is? Why did you do that? Because I did all my research. Close, but no cigar. 99 out of 100 times when I ask someone, why did you do that? Number one answer, because I thought it was going to go up. Every single time. Because I thought it was going to go up. My next question is going to be why? Why do you think it's going to go up? And they hum around, well, Kramer recommended it. I heard on Fast Money. Fox Business News said it was a sure winner. It's one of the Bloomberg top 10. CNBC top 50. I mean, there's all kinds of answers. But the correct answer is what? I misread the chart. You have to do your due diligence, right? So the short answer is due diligence is important. It is. With that said, I received an email on Micron today. And the basic answer was, Kevin, when are you going to adjust Micron? Let me go to this chart. And the short answer is, well, I thought of adjusting and preparing it for earnings a week ago. But a week ago, we went up to 52.75. Then we tested our $50.82 range, fell below it. Before you know it, we were below the 200. And last Thursday, I was all set to throw protection on. But then it bounced back up to 49.50-ish. Back above the 200 day. A down day, and then today, and I'm like, as earnings at the end, it was down this morning. We did get a bounce off the 50-day. In fact, if we even look at the after hours on Micron, it's up another $2.80. I had some July short calls that I rolled out. And basically on Micron, we're sitting at 48 long puts and 57.50 covered calls. So the question is, Kevin, why did you take so long? Why? What did you do that made you take so long on Micron? Data not available, huh? There we go. What was your decision? And the short answer is, with all these earnings, some are off. But the short answer is, usually Micron has a little bit of a run. A little bit of a run before the earnings. And it just hadn't run yet. It just hadn't moved. Because it hadn't moved, I got caught waiting for the move. Well, Kevin went down from 52 down to 48, right? Okay, so it moved 80% or 8%, excuse me, but didn't move from 44 up to 54. Maybe I missed the pre-earnings run from 47.10 up to 52.75. So the short answer is I waited too long, paid an extra premium of implied volatility. We'll have some volatility crush tomorrow. Then I hope by moving my short calls out in time, I capture some of that there as well. And we will most likely see Micron get back up to 60. Wasn't a great earnings, but they guided higher. So when I got the email this morning, I was already looking at Micron going, dang it, what do I do? I should have held on. Should have held on at the end of the day, but there are two of you that actually sent an email throughout the day. One in the morning, felt the pressure. I got the protection on. We might go ahead and short $55 puts against those long puts at 48. Trying to make up some extra money on the way up. But nice to see Micron actually getting some love after hours, and off it went. At the same time, I had another individual ask me about Boeing. And he's like, man, we have Boeing, we have puts on. What are you going to do about Boeing? Now, to my credit, he did ask me around here about taking profits and taking off the puts on Boeing. Actually, it's probably closer to right here, to be honest with you. Might have been up here. And my comment was, it hadn't found a bottom. For a lot of today, if we look at Boeing on a minute chart, meandered around till noon Eastern, started its upward trend. Then all of a sudden you'll see that we kind of jumped in on the drop. Hey, it was a drop, and right around 188, we decided, you know what? Time to take off that protection. Time to add those leaps that we've talked about, 3 weeks ago, right? We add in a bunch of our 275 leaps right here. Kind of nice when you can get something on, and what you paid $27 for is now $29.55. But the idea behind it, it should at least go up to 200. At 200, we might take some positions off. Or we might say on Boeing, hey, you know what? It's going to get its approval sometime soon here. They've done thousands of hours. The upside is sitting at 267. The upside is a 200-day simple moving average of 267.08. That's where I would be looking to exit those new leap long puts that we put on that are profitable right now. 275s. We made a pretty good, nice little run at it the first day. But there is no reason why this position can't make 100% return in the next 4 weeks, if not more. Well, Kevin, how can you say that? How could you say that those leap January 22, 275, right? What we paid $27 for, that are now worth, are now worth 29. It all comes down to the delta. 0.44 between 197, 194 and 287. We basically have $91. Half of $91 is roughly $45. If you wanted to do 40% of $90, you're talking about $36. $36 on a $27 investment. All of a sudden, I'm thinking, I'm looking for that 100% return. Thank goodness we didn't get in at 34.60. Thank goodness it had some down days. In fact, it actually had some down weeks. That's okay. We had some down weeks and we got in at a price that was good for us. It was actually a pretty darn good price, period. And because of that, off we go. So for the couple people, and I know I'm going to get this, and it comes down to earnings, Boeing, price action, but we make our decisions with the most pertinent information we have at that time. What I say tonight might be different tomorrow morning. That's the beauty of active management. You don't just have to let things sit. You actively manage the portfolio with the information you have right on hand when you start to put those positions through. Kind of smart, if you ask me. With that said, our market recap started out with one of the most unusual statements. With COVID-19 cases rising across Florida, Texas, Arizona, and a V-shaped recovery at risk, the S&P closed nearly 2.9% lower, with all 11 sectors underwater last week. So let me just run really quick. And let's go SPX. And I'm going to run this out to 8 months. So here we are. Our 8-month recovery, right? If I was looking to annotate this, I'm going to go from January 1st straight across. My question to you is this or is this not a V-shaped recovery? Is it or is it not a V-shaped recovery? Well, Kevin, it's kind of an elongated V. We could almost say, yeah, it looks like a hockey stick, right? It could be the hockey stick recovery. But as far as I'm looking at that, we have had our V-shaped recovery. Is there anyone that agrees or disagrees with me? How more V-shaped can we go? Well, Kevin, from the highs, well, come on. We're usually going by the years. We're not going to go a V-shaped recovery from the highs. And if you did want to go from the highs, 32.33 versus 33.93, pretty close. We did miss it by 150 points, 5%. But from where we started our market off for the year, with all due respect, we've had our V-shaped recovery. There's nothing in jeopardy. Our V-shaped recovery is in place. Now, yes, we are down, what, 5.5% for the year now? I believe it's 5.5%. Let's erase a couple things. Thought I had this all prepped out. Year-to-date change, 5.5%. Hit it exactly, right? So here we are half a year in, and we are down 5.5% for the year. The V-shaped recovery has happened. We're now on our next stage, maybe a retest. A retest and going down to, oh, I don't know, I'd probably say we could lose 17.5%, a 50% retracement. I kind of sat here and I thought, boy, what a use of the words that are popular. Way to throw the COVID scare and state the 4 states or 3 states that are really going off right now. But boy, they missed the boat when it came to chart reading. They totally don't get it. Financial stocks took a beating after the Federal Reserve ruled for large banks to suspend share buyback and then cap their dividend payments in the third quarter, preserve capital amid the uncertain economic future. Was a recommendation, right? It was kind of ridiculous. Just absolutely ridiculous. We had Disney and Facebook beat up. Someone asked about Facebook. It's disappointing that the left has put so much pressure that if Trump uses Facebook, they're going to block some of their ads. Same thing with Twitter and so forth. Not necessarily fair, but boy, Facebook reaches so many people. I would think you would see stores coming back that want to use Facebook. You might have right now, well, they're being beat up because of the fact that they won't show some ads or do a poor job of verifying the ads, even though they're just trying to, hold on to our freedom of speech amendment. In all reality, I think Facebook's going to get beat up a little bit because the first thing that happens when companies are getting beat up in the market, heading to recessions, having tough times, the first thing to go is always their marketing budget. They've got sales reps. You can dial for dollars. You can canvas for dollars. You've already put some marketing in place that should give you some longer term results. The first thing that always disappears in a company is a marketing budget. So as companies are getting hit, Facebook's taking the brunt of it right now, but marketing firms in general will find out that there are less and less companies willing to spend money on marketing, as that's the first thing that goes when lean times are available. So as I read through this market cap, for the first time in a while, the market pulse made me think, boy, they're really stretching for information here. Somewhat ridiculous. Where will the markets end this week? I'm going to say flat because we have a holiday on Friday. Big money for all intents and purposes bought back in. This was a bit of a rebalancing. You'll probably see pretty low volume. If you even look at the volume today, it was on pretty low volume compared to Friday and Thursday. But plain and simple, low volume, big money's not in. We had our rebalancing of the portfolio last Friday. We have some of the buying back in to put new money to work. We'll probably have some more buying back in the beginning of next week as new money for the quarter comes in. I'm planning on a pretty flat week for the end of the week. Still see bullish signals for the S&P, for the NASDAQ. I'm really just kind of sitting back and waiting. Where will the S&P end July? Right now, I don't have a take. So today I'm saying flat. We'll have to go through 3 weeks till July 22nd till we start our earnings season full-fledged, which means we're going to have a week and a half of earnings. When I listen to Nike, when I listen to, well, Carl, I wasn't even impressed with Micron, to be honest with you. This is the one that we're going to see, plain and simple. We're going to see underperformance. Yes, things have gotten better, but they're nowhere close to where they used to be pre-COVID. And analysts haven't picked it up yet. I don't know if there'll be a change as we go through the earnings season, that they're going to be more of a pass if they're close. But plain and simple, earnings should not be very good going into the future. Our earnings season for July should really be downright pitiful. Chesapeake filed bankruptcy. Not a lot by way of energy that's coming up. In all honesty, retail's taken a beating. So it would surprise me to see any type of run up in earnings, especially coming up to July. I'm going to say flat, but I'm leaning to a negative July. This week, pretty important Thursday, as we have our average work week reports coming in, non-farm payrolls, private payrolls. Unfortunately, that could cause some volatility because there will not be big money. So you'll have usually retail money and retail overreactions occurring on Thursday. Markets closed for the 4th of July. Go out and have some fun. Wednesday and Thursday, we have China's non-manufacturing, manufacturing PMIs, seeing if China is still growing at the rate that they think they are. If they're still lying about their growth rates and the rates that they think they're on, it'll be interesting to see. Plain and simple, I would assume they would continue, even though they had a bit of a scare and a flare up again of the COVID-19. I would think they would want to fake their numbers and make themselves look pretty good. It's all part of the game with China. So maybe we can see Baidu back up to 135. That would be nice. How am I looking to trade? Letting some things run. I'm still taking profits, trying to take profits off of puts. I'm trying to shift leaps farther out in time into January 2022. We're going to have an election, so we're going to get some more volatility as we continue to go against, continue to get into the third quarter. I found an interesting article that for me explains why the rally is going to keep going. There is unusual short interest positions growing on the S&P minis. Everyone right now seems to be under the impression that things are going to go down. Maybe it's the market worried that Biden is ahead in some polls. Democrats will not make the stock market easy. In fact, the Democratic platform will crush the market in certain areas. Democrats right now are not as business friendly. I don't know if that's why futures are worried, because right now almost everyone, even Fox News, is talking about how poorly Trump is doing and how well Biden is doing. Personally, I guess I don't care what your affiliation is. I'm just not sure how we can let someone with dementia, even though it might be the onset of dementia, be our president. That scares me. I really, not only do I disagree with the platform, but if we have a president with dementia, I think the vice president may take over those presidential duties in as early as a year. We have such a short interest right now in our futures, our mini contracts, that's somewhat unexplainable unless you go into the politics and how they affect it, that we're either going to have a pretty good rundown or there's got to be one huge short covering. And that short covering could really move our markets for an unbelievable Christmas rally, or it can doom our markets. Right now, the only numbers that justify the amount of short contracts that are out there have to be directly related to polling positions. And that's where some of the polls are released seems to indicate the short selling, and it just continues to grow. So, sorry I'm talking politics, but right now the only reference point to the amount of shorts, the days that they're going, the amount of high contracts, is directly related to the polling on how well Biden and Trump are doing in their swing states, in their secure states. It's really interesting to see. I have yet to notice or watch or take part in knowingly a short success where the market just tanks and all these shorts make a grundle of money. I usually see it on the other side where they've got a cover and it pushes the stocks higher. So I am going to pay attention to see if this might be the first way over shorted, more than 1%. If this one will continue to be the one that, hey, they always have to buy back in and cover. Maybe this is the one that really runs for an extended period of time. These are the ones that a day trader or a swing trader will brag about how they've got some new system that everyone's going to learn and be better if they just follow it. When in all understanding, it's just getting lucky on something like an E-mini futures contract that's a short, naked short position. All right, next one, Ford, I believe. Ford has some big stakes. I'm excited to see their new trucks that are coming out. Should be the end of this year. I hope they're more user-friendly. They have more gadgets in them. Problem is with more gadgets, more electronics, not as reliable as a truck was before. Everything's all compacted on top of each other, harder to work on the truck, easier for a chip, a circuit breaker, a motherboard to go out, and what a pain in the butt it is to fix those kind of things. I hate that cars are on top of each other now. You can go back to a Chevy truck or a Ford truck or a GMC truck that's 20 years old. And if you could find the parts, you could have it fixed and replaced in a day. Nowadays, with all the computers, it's almost impossible. Those mechanics that like to do work on their cars, those days are long since passing us by. So it'll be interesting to see if Ford makes a truck with enough of the bells and whistles to still make it a truck and easy to work on if you had to. Great new technology, competitive segment, something to really read. COVID-19 made the Federal Reserve stick. I found an interesting article here just looking at what the Fed is trying to do. If you have a somewhat understanding, please read through this. It'll be helpful. And obviously the IRS Act for RMD relief. For those of you that need to dip into some of your 401ks that have been rolled over to IRAs and so forth, you now have the ability to do that. Now, I'm going to apologize. I did find an article on the basic laws of human stupidity, and I absolutely fell in love with this. Always inevitable, everyone underestimates the number of stupid individuals in circulation. As I read through this and I looked at their little chart, helps me understand why we got filled at $27 today. Why I was able to pick up some rolls on some things and got filled at really some ridiculous prices. Just ridiculous prices. So here's the short answer. Don't ever forget there's some idiot on the other side of your trade that guarantees he's right, that has an education, that absolutely is selling a box of goods that there's no way in hell they can deliver on. So, plain and simple, why do we do what we do? Because there are enough stupid people in the world that think they're right every single time, that gives us the ability to add long puts, and they'll take the short side 99 out of 100 times. That they think they've got some new algorithm, some new computer program, some new way of doing something that is only made for middle America at 10 grand a pop, when they could be making billions of dollars if it worked, being a whale trading for JP Morgan or some of these big guys out there in the real world. Those idiots that we are so ticked off on, the ones that want to rant and rave on your Facebook posts, the ones that will send emails or spam your email, those are the same people that we're looking at to help fill our protection, that give us the ability to protect ourselves or buy insurance on stocks. It's absolutely what makes our market go around. I absolutely love the article. You cannot find a better article right now. If you want to sit back and have a good laugh, this is the article to read. Not only that, it's a great article that really puts some of what we see in the stock market into place. With that said, any questions you guys have today? Any questions that I missed? I think I got yours, Ida, on Facebook. But don't forget, stupid people is what makes the world go around. And it doesn't have to be in the stock market. It's all over in our world. So take advantage of them. Let me give you guys 30 seconds to type in any questions. If not, I want you guys to have a great evening. Keith will have the trade findings and adjustments for tomorrow. He'll be in charge of that one. And other than that, guys, I don't see anything coming in. Please have a good evening. I will get this up for you as soon as possible. Just remember, you don't always have to be right in your decisions, but you have to be able to show that you've done your due diligence, that you've put the effort in to make your best educated decision. Quick question came in. Question: if you wait for Boeing to make a bottom or to reach the 200 level, then you won't lose value in the long put where you can no longer buy 100 shares. You might, but your long puts were taken off $6 ago. Long puts were taken off when it was still in the 188 range. Remember, the long puts are not a long put, they're a protective put. And those protective puts are there for a reason. But today when we broke the 180 and we had the high volume, we took the long puts off on Boeing closer to 188. So the long puts that you're talking about are already off and cashed in. At least I think they are. Boeing. Nope, they're still there. Actually, they might be coming off tomorrow. Let me take a quick peek. Yep, those ones are going to come off tomorrow if we need to. Why not do that? Because those ones still had money left in them and profits. The problem is, though, Boeing right now is down $2. So we'll see where it's at. We are running that set a little bit different, but yes. Those will be looking to come off as it tests the 188 again tomorrow. We'll probably go down and do a retest. Maybe it's going to test the 190s, but those ones are coming off tomorrow. The other ones that were at 200 had already come off. Good question. Are there any other questions about Boeing? Jim, I will give you a call right after when we're done here. And if there are no more questions, guys, have a great evening. I appreciate you being here with us tonight. We look forward to seeing you tomorrow. He will take care of trade findings and adjustments. And guys, take care. Have a good night. Bye-bye.